Hey everybody, this is John and welcome to the free video. So first thing I want to look at is the VIX. We are putting hedges on right now on the VIX by buying call debit spreads with the idea here that we're at a lower range and looking for a little bit of a pop-up. Doesn't mean we'll get it, it's just that this is where you put on hedges. Every time the VIX spikes, like up here, I get a ton of emails going, should I hedge, should I buy VIX calls? It's like, no, you buy VIX calls when it's low. If you lose money on it, that's fine. It's a hedge, but if it spikes up. So we're doing that now, and just want to kind of keep that in mind. Yes, the markets look great, but that's when you hedge to do that. And then from there, just kind of what about, different markets and things like that I like here. One of my favorite stocks right now is Data, however you want to pronounce it. We have got a 3-day squeeze, a 2-day squeeze, and a daily squeeze. The stock has been very, very strong. And you can see right now that we have got kind of a timing here. And what I'm looking at potentially is that from here, we could actually bottom out and start to explode for a run into earnings. All right, and speaking of earnings, we're going to look at this really cool tool here in a second. As an example, there's a trade that I like to do on Roku. I'm long Roku right now, so it's a little early for an earnings trade, although we're doing that earnings trade option. But I've got 2 trades I want to do on this. On the first one, we're long right now, and I'm looking for a move to about 46 up to 51. Okay, and 46 on potentially tomorrow, or potentially on the 26th, and then on February 5th-ish, potentially up to 51. So that's a trade right now. But then there is a special earnings trade that I like to do on it, which you'll find like about 8 days out. And 8 days out is way, way, way better than 20 days out. All right, so let's take a look at that. So we are kind of smack in the middle of earnings season. So one tool, I know a lot of you guys already use this a lot, but if you're newer and don't realize what this is, there are not many tools out there where you can actually back test option strategies, especially as it relates to earnings. And so what this is here is that this is a way you can kind of go in and say, all right, you know what would happen if I bought Roku calls, okay, 8 days before earnings, and then closed them out 2 days before earnings? What typically happens? Because remember, you're going to get rising IV and price appreciation. Well, if you bought 70 Delta calls over the last 2 years, every time you bought Delta 70 calls, you would average 104% return. So it shows 3 wins, 2 losses. The wins $4,900. If you bought Delta 50s, you had 139% return. Delta 40s, 145%. Delta 20s, 150%. Delta 10. So the reason I like to buy out of the money earnings, going in, out of the money call options going into earnings, is because you can see right here the percent return on those is much better. So what happens if we tweak it? So when I go in here and say, okay, instead I want to buy calls 20 days before earnings. Okay, so here, let me get this. So if I want to do, say, 20 days before earnings and then close the position 1 day before earnings, how does that work? That actually sucks. Okay, so what's great about this is you can actually come in and say, okay, well, what if I did 20 days before earnings and closed it out 8 days before earnings? Okay, which is not something I've ever done before, but I can see, yeah, that sucks too. So what's interesting is there's a sweet spot in there, and it says, okay, well, what happens if I were to say, buy calls 8 days before earnings on Roku and close them out 2 days before earnings? Well, how does that generally work over time? Boom. So what's great about this is once you have this information, I mean, this is like, this is kind of like a magic box in terms of knowing exactly what to do over however long a time you want to see how a company does, 2 weeks before earnings, 3 weeks before earnings, 5 days before earnings. Long call. Do you want to try a straddle? Do you want to see what happens if you do something else? So anyway, a lot of cool stuff there you can do with this. All right, so we have partnered up with CML, which is Capital Market Laboratories. I've been using the software for years. It's amazing. If you go to their site, their software costs $149 a month, anywhere from $99 a month to $149 a month. with us, you can get it for only $89 a month, all right? And there's also new scans where you can scan for squeezes, okay, in addition to earnings. You know, how does Microsoft work with squeezes on a daily chart over the last 8 years, right? You can see in some cases that there's earnings trades where over the last 12 earnings, the trades worked 100% of the time. It actually gives you the win ratio and stuff like that. So this page, if you go to simplertrading.com/CML, it'll take you to this page with a special price. And if you didn't see the webinar that Ophir and I did tonight, you can go through, and there's a lot of questions here and a lot of videos and things like that too. This is something that will make you money, all right? It's hard. There's very little ways to backtest options. This is something that backtest options and gives you precisely the best way to trade whatever stock you like to trade as it's running into earnings. It's pretty awesome. All right, hope you guys like it. Have a good one, and we'll see you at the next update.